Hi everyone, I'm Ken from CTKS. If you're new, a very warm welcome and welcome back KS family. Looking at global markets, China and Russia are in the red. And we saw sector performance in the main market indices slightly down. We'll look into Tesla's recall, but Tesla was only down 1.39%. However, the core PPI and the PPI, the Producer Price Index, absolutely spooked the markets. With inflation getting pushed through supply chains, that's likely putting pressure on the Fed to increase the federal funds rate, and we did see an increase in the probability of a 50 basis point increase from 9.2% yesterday to 12.2% today. The good news is that producer prices are coming down, but they're not coming down quite as much as what the Fed would like. I thought it could be good to give you a little bit of context as to where the expected federal funds rate will be in 2025. We're expecting higher for longer. And it's important to note that the federal funds rate has absolutely increased at one of the greatest paces ever seen in history. Unfortunately, this tweet is a little bit hard to read, but it tracks US price and wage inflation. And notice how the wage inflation and the price inflation are following each other. This is why the Fed wants to bring down wage inflation. We were thinking yesterday that the yields were fairly overextended and may get a pullback. They're absolutely still increasing. The yields are being affected by the PPI. Charlie Munger is in the news again, piling on the hate for crypto. Unfortunately, Charlie doesn't realize that crypto is just blockchain technology and the next evolution of the internet. In 1993, I set up and ran an internet service provider, and the government wanted nothing to do with the internet at that time. It set up government task force to literally destroy the internet, and we know how well that actually worked out. A lot of people in 1993 were saying the internet is just a fad. I didn't think so, and I don't think crypto is a fad either. As I said to Elon Musk today, fiat notes are no good on Mars. Sorry, Charlie. When looking at mortgage rates, they're starting to tick up. And we can see by looking at initial claims, layoffs have not ticked up just yet, even though so many companies are talking about laying off staff. And why is this the case? Because job openings are very, very strong. There's nearly 2 job openings for every 1 unemployed person. With that as background information, let's run the numbers. Bitcoin is currently up 1.71% to 24,517. Ethereum is up 1.23% to 1683. For a little bit of a change in pace, I thought we'd look at the smart money buy and sell levels on Tesla. And making the news today, Tesla recalls more than 362,000 cars due to self-driving crash risk. About 42 days ago, I was explaining that Tesla was coming into some very strong smart money buy levels. Everybody was expecting Tesla to collapse. I didn't see that in terms of market structure, and I called out that fact. And what we actually see, Tesla's coming up to a lot of overhead resistance at the moment. We're getting technical rejections from this particular smart money sell level around the 215 mark. And the news of Tesla recalls is not a good one for Elon. Of course, this will actually create negative sentiment that will play out for some time. Knowing where the internal market structure is the thing to do at this time if you're in Tesla. We have a stronger smart money buy level between 161 and 167. The next major buy level down is between 138 and 146. The next one down is from 113 to 119. The thing to be aware of, Tesla defended this particular smart money buy level around the 191 mark for quite a considerable period of time. If Tesla actually breaks below this 191 level, it's a pretty much guaranteed fact that it's going down to around the 164. Just keep this in mind. Why is that the case? Because there's a lot of fresh air in between these particular lines. If we were seeing stacked support levels, it would be very, very different, but we're not seeing these at the moment. What we're actually seeing through the CTKS method, the thing to bear in mind, that Tesla has really performed incredibly well. It's come 113% up in 42 days. Getting a retracement is quite normal, and we've got some very nice strong smart money buy levels to catch Tesla's negative price. The release of the hotter than expected PPI has absolutely thrown the markets for a bit of a curve. We were hoping that junk bonds were signifying that a bottom had been reached on risk-off behavior, but the PPI coming in stronger than anticipated, higher than anticipated, has actually thrown the markets in the other direction. We can see that yields are continuing to increase, and the dollar has broken a very key level of smart money sell resistance, and I'll explain that in a minute. We can see that gold is making its way down as the dollar and yields come up. Junk bonds indicating that risk is leaving the market, and we can see that bond prices are moving inversely to yields, as is their mathematical property. At the moment, fear inside the market is still really, really low. From yesterday, we saw that the DXY was making its way through this smart money resistance level. It found support, rallied across it, came back and retested, and now is resuming back up. The DXY is currently trading at 104.051. Increases in the PPI are very good for the DXY. I'm a poet and I didn't even know it. What we're actually seeing is that the DXY will come into resistance around the 104.397 level up to the 104.434 level. And we'll check out what is above that tomorrow. Please let me know, what do you think the DXY is going to do? Do you think it's going to rally up on the news of the PPI coming in hotter than anticipated, rates increasing, the potential of a larger than expected federal funds rate boost, or do you think it's going to come back and test this particular smart money buy area? Or do you think it's going to go flat? And why? It's a really good active learning exercise to actually think of these issues. Please let me know your thoughts in the comments. When looking at the DXY, it's always important to look at gold, and we can see gold from yesterday's video was retesting this smart money sell level between 851 and 853. And it almost made its way down to the smart money buy level around 1835, but it didn't quite make it. It's been trying to get above this 1853 mark without much success. If we get a rally inside the DXY, we would expect gold to actually continue to come down and to find support in this smart money buy area between 1807 and 1834.90. If in fact the DXY starts to go down, we would expect this 1851 to 1853 level to be challenged and potentially broken. So just keep in mind, there's always three strategies on to which the market can progress. It's really easy to get caught up in economic news, but the fact is, reactions to economic news can happen instantaneously, but they can take years to play out inside the markets, or if not years, months. As a professional, what you want to do is to look at a lot of different charts to actually stack your probabilities. If you look at one chart, you have one probability. If you look at two, you have two. And you need to stack as many probabilities as you possibly can. When we actually look at the SPY, we can see it's been reacting to the PPI news. The SPY has had a lot of trouble breaking through this very short-term level at around 415, and we can see it's under pressure. It's actually coming down with the main markets, with all the other indices, to test this particular smart money buy level at 407.05 to 407.45. And then there's a greater smart money buy area below that from 403.19 to 405.96. And don't forget, the CTKS method looks at all of price action, not just recent price action, all of it. And if you want to be able to do this kind of analysis, all you need to do is to go to ctksmethod.org. One of the things that we notice with the DXY coming up, yields coming up, it's throwing pressure on the major market indices and also gold. It's very, very good to keep on stacking your probabilities and always have your three-dimensional thinking playing out at all times. When we look at the smart money buy levels and smart money sell levels on Apple Computer, we can see that this smart money sell level from 156.44 to 158.38 has been obeyed very, very well. We had a lot of negative air increasing the indices, trying to actually pull Apple up, and Apple is a major component of the indexes, so just bear this in mind. But with the PPI coming out, there's a little bit of turbulence inside the markets, as a lot of proponents think that the Fed will have to increase interest rates beyond what was anticipated. If this is actually the case, the next major smart money buy area for Apple is from 144.64 to 148.15. It's time to look at Bitcoin and crypto, and Gary Gensler is doing a number on crypto, but it's not working, Gary. Thank you everybody for your very kind sharing on Twitter yesterday. I just reached out to the community and said, do you have any memes that you would like to share? And this one was shared. It's really funny. The SEC crypto registration form, please let me know your name and a number where you can be reached for your lawsuit, says Gary Gensler. And this joke is not too far from the actual truth. Of course, Gary is very concerned about the banks, and the Basel Committee on the Banking Supervision System actually estimated there's 0.01%, 1/100% estimated crypto exposure for the surveyed banks, and these are the largest banks in the world. What actually happened inside the crypto market? The PPI, the Producer Price Index, came out. And I mentioned yesterday what the PPI is all about. It's just a forward measure of CPI, or consumer price inflation. And what are we seeing with Bitcoin? And we know where Bitcoin goes, so too does the rest of the entire crypto market. It's very important to keep your eye on these Stanfield zones. These SCs actually tell you where the smart money is stepping in to either to sell or to buy. And what we actually see with Bitcoin is that there were some fairly loose smart money sell levels up around 25.403 and 25.943, but they didn't get hit. The PPI squashed them. Basically, people are worried that the Fed will increase rates longer and higher. And this is actually correct. When we look at the expected federal funds rate, on February 2nd, it looked like this. On February 15th, it looked like that. It is higher and longer than expected. When we looked at the Bitcoin longs and shorts yesterday, the Bitcoin shorts looked a little bit like this. When the shorts get liquidated, they cause a massive increase in price. And when the longs get liquidated, the other side of it occurs. We see massive drops in price. We're seeing some pretty healthy liquidation volumes at the moment. Nearly 192 million across nearly, well, a little over 60,700 positions. And when we look at liquidations across the past 24 hours, about 55% long. What about the past 12 hours? Ooh, 66% long. What about the past 4 hours? Ay caramba, 97% long. And what about the past hour? Oi, nearly 99% long. The longs are actually just swap with the shorts. It's time for them to be laid out on the floor. Yesterday it was Bitcoin shorts, but today it's Bitcoin longs. We're going to definitely need more memes. Please reach out to me on Twitter if you have any memes that you'd like to share. In crypto, we love Gary Gensler because we have so many memes on Gary. Here's Gary as Mr. Burns. Many thanks to our beloved global family who sent these memes across. Here's another one, me taking profits. But it could 10x. No, don't take the profit. Many people feel this way, but traders don't, because traders are always in and out of the market. You only have to have a required rate of return or just be actually taking note of market structure. And if things change, like a hotter than anticipated PPI, yields not falling over, then it might be time to lessen your positions. But of course, you must always do what is right for you. Only you can pull the trigger on either a buy or a sell. The other thing to note, it can sometimes take quite a bit of time for things to play out in market. We can see that for Ethereum, it was trying to break this 1690 to 1705 smart money sell level. It was suppressing price, but then it shot through, the PPI came out, and it came down. So overall, ETH is down in the last 24 hours from where it was previously in the last video. And you might remember that I said it could be very healthy for ETH to actually pull back and challenge either this primary support or secondary support mark. And we're seeing a bounce from the secondary support. If it actually goes into the smart money buy area from 1581 to 1607, that's actually quite okay as well. This is exactly the reason why we trade. We're after an expected rate of return or a required rate of return, just being and acknowledging internal market structure through the CTKS method. It's a very, very valuable thing to understand how market structure and short-term support and resistance levels actually interact with one another. A lot of people yesterday were looking at DOGE and saying, DOGE is going to go to the moon. It's going to go so well. And of course, that's what we want. We want every project to succeed. When one does, all of them do. What did we actually see? Because we knew market structure. We knew between 891 and 908 there was a smart money sell level. So it was not going to be easy for DOGE to get through this no matter what. And internal market structure actually trumps just about everything, because this is what smart money looks at. DOGE is currently trading at 855. If it comes down to the 831 to 835 level, that's just a smart money buy level. But we've got to be a little bit careful. If DOGE starts to break too much market structure, it could have way further to fall. And that goes with everything. All cryptos, all stocks, all indexes, all obey the same basic rules. When you learn the CTKS Method Standards Certification process, you actually draw what are called Stanfield levels, or SLs. They are the gold standard in actually understanding where price could go. And we're always interested where price could collapse to and where price could explode to. These implosions and explosions are what we need to understand inside the market. The market is designed to pull people in, make them FOMO in so that they just pump up the price and make them FOMO out through FUD. Very, very turbulent, emotional times are experienced by the vast majority of retail investors and traders. But we seek not to be these people, and that looks like Sylvester Stallone. We seek to be like this guy. Well, if you're a girl, it would be a girl. But we seek to be like this person, standing on the outside and just looking at what is happening very impartially. This is incredibly important to do, because if you get emotionally, well, too emotionally invested, you'll find yourself making decisions that are not in your best interests. Al said, I believe that outer peace is a magnification or a projection of inner peace. I'm not sure if outer peace is possible without inner peace. However, they are both interrelated and are important to our well-being. Ken says to be kind to yourself and be kind to others. This is the first step towards inner peace, to forgive and forget our past mistakes and those who have wronged us. Replace the self-doubt and the eye for an eye mentality with love, gratitude, and forgiveness. Thanks so much, Al. And enjoy your trip, my friend. When it comes to trading and investing, if you're buffeted around by your emotions, sorry, Warren, you'll literally be at the mercy of the market. You'll get desynchronized. You do not want to do that. What you want to do is to be impartial. Don't get caught up in all of this drama, because it's drama. What you're doing is you're seeking to get in and out at a reasonable profit. A lot of traders and investors new to the market say, Ken, I don't want to hear about this stuff. It's just junk. It's not important. Every professional trader knows that this is more important than the technical levels. Thanks, Ken. You asked if outer peace is important, and I would say, yes, of course it is. To me, outer peace is determining to have a positive outlook on life and our future. When we have this, we are like a magnet that attracts positive outcomes in every area of our life, and also the lives of those we interact with. We expect positive outcomes and people are attracted to that. When we spread positivity, we are exhibiting outer peace. Things change around us spiritually, emotionally, physically, and financially. These areas will all improve when we spread outer peace. To be able to do this, it's nice to have inner peace first, but I believe it's possible to exhibit outer peace first and let the inner peace catch up. Sometimes we can heal ourselves this way. Sometimes it's easier to be kind to others than to be kind to ourselves. So I don't think it matters which comes first. Concerning trading, when I'm experiencing inner conflict, I just shut down my trading because I've learned it just won't work well until I get my head and my heart straight. Thank you, Art. You're an absolute legend. And Art and I have been trading in financial markets for decades and decades and decades. We know what we're talking about. This is really, really important to understand. Yesterday, we were expecting a bit of a pullback, and that's actually what we got inside the market. Remember, overall the macro is actually quite good. It's quite healthy. Let's have a quick look at XRP. Yesterday, we saw with XRP that it was coming up to challenge this smart money sell level. We can see that it didn't actually succeed. And when the PPI came out, everything came down because Bitcoin came down. So we need to be aware of how the different patterns play out in the crypto industry. Bitcoin leads the market. When people are new to trading and investing, they focus on the money. This is the absolute worst thing that you can do. And Brett talks about it. Brett says, as you always say, Ken, once you begin to focus on the method and remove yourself from money as an emotive force, then we can really begin to trade. No fear of missing out because opportunities reset daily. There are really so many trades, and no fear of getting it wrong because it's all learning. The more I get it wrong, the more I learn, and learning that lesson is important, or I'm doomed to repeat it. Inner peace gives me the strength to control the outer peace, and also cold showers work. Thank you, Brett. One thing to also keep in mind is that price moves between these smart money sell levels and these smart money buy levels. It can take some time for them to reach up to these key structural areas, but they can be used to guide your progress and to understand where you're at inside a specific cycle. When looking at ADA, we can see a slightly different situation playing out. There's a smart money buy area between 377 and 384, and currently ADA is trading at 389. This is a very different picture than we got from XRP. Also, ADA has a lot of overhead sell areas as well. So this is kind of like being underwater. If you're going scuba diving or something like that, the higher the pressure of the water above you, the more it presses down on you. It's just one way of looking at it. So when you actually look at ADA, one thing that we would want to see is where is the next smart money buy level in terms of objective dynamic market structure, and it's a big one. It's a really, really big one. It's a continental shelf. It's between 281 and 307. So if we see that ADA doesn't hold this smart money buy level around the 380 mark, it could make its way down over time into this really, really big area of market support. And also we could get a kind of a climactic sell-off and a rebound, because these smart money buy areas, when they get really, really thick, that's an absolute ideal time to actually enter the market or to set your buy orders deep inside that pocket. Why is that? Because if you get a climactic sell-off, all the longs getting cascading liquidations, they can spike into this smart money support area and then rebound like a Super Bowl. It's just awesome to watch. The market was so incredibly green yesterday, it would have called a lot of retail investors and traders into it. And now the market is red. The retail traders and investors would be going, oh no, I got it wrong, I should get out. What we do as a community, we're always looking for where we can actually profitably enter. And the safer the entry, the more that you've got objective dynamic market structure backing you up. You've got all the smart money there to support you. And the thicker the level, the safer you are. Looking at the top 9, we can see all of them in the past 24 hours have pretty much turned negative, except for good old Matic. And Matic does tend to shine around times like this. CoinMarketCap has gone a little bit crazy. OKB is the greatest gainer over the past 24 hours, followed by Matic, and then followed by EGLD and Magic. And the rest are pretty much negative. Let's have a look at the greatest losers. Mina, Render, and they're just a little bit out of order as well. The Graph, Rose, AGIX, Tron, Maker, XMR, and Leo. Let's pretend that you could go back in time to 1990 when the first stirrings of the internet were there. In around 1991, 1992, it started to hit a bit of adoption, but in 1993, it kind of went mainstream. Well, the startings of it anyway. The concept is, if you could control, as a country, if you can control the internet, all the protocols that the internet ran on, and you could siphon off all the brains that would build out the internet, how powerful would you be? Could you say that the internet became the oil of the 21st century? Why don't you think about it maybe in a slightly different way? Just say, for example, that you lost internet connectivity for 24 hours. How would you do things now? How would you do your work? How would you do your just living from day to day? Are your actual movies and TVs streamed via the internet? What about your banking access? What about if you needed to pay a bill, but the internet was down? What about if you wanted to go shopping and the internet was down? And say the internet was down just globally, right all around the world, the internet went down. That would be a bit of a problem. We could absolutely say that the internet has become a critical component of the world. But in 1993, it was a fad. In 1993, the governments tried to ban it. They tried to destroy it because it actually impacted the postal services. They thought nobody will send mail. Nobody will need a postage stamp. And guess what? They were correct. So why am I focusing on Abu Dhabi, where $2 billion worth of Web3 startups have been funded? Because the Arab nations actually are the dominant oil producers in the world, they understand the power of energy, and Web3 is energy. And what are they doing? They're just harnessing the energy. They know that the energy is shifting from oil to digital. Unfortunately, many Arab nations are not friendly with the US, and the US understands that they need to do something about crypto. That's why US lawmakers are reintroducing bills to remove roadblocks for crypto investments in retirement accounts. But what is Gary Gensler doing, the chair of the Securities Exchange Commission? He wants to hand all of the oil of the 21st and 22nd centuries into Arabian countries, anywhere but the US. Why is that? Gary, Mr. Burns, is now proposing tougher rules as part of the SEC's crypto custody crackdown. What is Gary actually doing? He's trying to safeguard the CBDC, the US digital dollar, but he's going about it all incorrectly. Gary, you should know better, my friend. Recently, Gary Gensler went after Paxos for BUSD, but Paxos actually has other stablecoins. The SEC didn't go after that. It went after Binance. And Binance is getting its checkbook out to pay the extortion fees from the SEC. Meanwhile, around the world, even Hong Kong, taking on from Germany's lead, is issuing tokenized bonds. But the US, as a sign of strength, is actually cracking down on Sam Bankman-Fried, but at home, after one of the biggest corporate frauds in history, and they're saying the federal judge is hinting at denying Sam Bankman-Fried any internet access. Whoa, way to go hard. Meanwhile, the SEC is at it again. It's seeking to sue Do Kwon and Terraform Labs for fraud. And again, what's Gary's premise here? Crypto asset securities. Oh my goodness, Gary. I think if Gary says it long and hard enough, everybody will just say, oh, Chairman Gensler says that it's everything is a security. The earth is a security. What actually happened in this particular case, Do Kwon was made aware that there were exploits that could be done, and he didn't do anything about it. In fact, he did the opposite, and he said, I dare you to have a go. I dare you to do it. And they dared, and people lost billions of dollars. I don't actually classify that as fraud. I do classify it as being very, very short-sighted. In legal terms, negligent. But not everybody in the US is so short-sighted and myopic as Gary Gensler, and how he holds that position is absolutely beyond me. Wyoming lawmakers pass a bill to prevent forced disclosure of private keys. I would expect crypto companies to start registering in Wyoming more than they have already. This bill was passed by a vote of 41 to 13 in the Wyoming House of Representatives on February the 15th, a day after passing 31-0 in the Wyoming Senate. It basically says no matter what kind of legal sanction has been leveled, you do not have to make your private keys known, being civil, criminal, administrative, legislative, or other proceedings. But that's in the state of Wyoming. And what about the state of crypto adoption in Dubai? Hint, hint, it's pretty big. Unlike Gary Gensler, the city of Dubai has been very welcoming of the crypto space. It's provided needed regulatory clarity to help the industry thrive. Just an interesting fact, the largest internet companies by market cap, just a survey of 264 companies, total combined market capitalization $5.816 trillion. And you may have heard of some of these, like Google or Amazon, Tencent, the former Facebook, which is now Meta, Alibaba, Netflix, Airbnb, PayPal, Uber, Shopify, Baidu, Datadog, DoorDash, Trip.com, Spotify. What would happen if these internet companies were not based in the US of A, but were based in, say, Dubai? How would that alter geopolitical sentiment across the world? Who would have power in that case? Gary Gensler is making this view of the future more than a reality at present. Nothing can stop crypto, but where it lives depends on legislation. Forward-thinking governments around the world actually embrace technology. Backward-thinking governments reject it and seek to actually just enhance existing incumbents. For example, the post offices back in 1993, when the internet started to hit mainstream adoption. Actually, it wasn't until 1994 that the Netscape browser came out. Gary Gensler is doing incalculable harm to the US economic system. Positive excellence has many facets to it, but one of the big facets to it when it comes to inner and outer peace are strength and boundaries. We must have boundaries for bad actors that enter our lives. It's very, very important to put the walls up. It's a good thing to talk about in the comments. How do you reconcile inner and outer peace with strength and boundaries? I'm really looking forward to your comments. Have a great day or night ahead, my friend, and we look forward to chatting with you tomorrow. Bye for now.